I do a Q&A segment for questions from you guys every week on the Almost Daily Dividends series, and this gives me a pretty good idea of what's confusing, what's unclear, and what investors want to know. So I made this special series of videos that will cover the questions that come up again and again. This time the question is, do I need to rebalance the Almost Daily Dividends pie? Hello and welcome to Almost Daily Dividends. This is the channel that will be all about tracking the progress of the pie and answering your investing questions along the way. The content that we discuss is intended for information and educational purposes only and should not be considered investment advice or investment recommendations. When investing, your capital is at risk and you may get back less than invested. Past performance does not guarantee future results. What is rebalancing? First, let's just quickly cover what rebalancing actually means. When you hold a pie like this, each slice is supposed to represent a certain percentage of your portfolio. Over time, some stocks will grow faster than others, some will dip, and those percentages start to drift away from the original targets. Rebalancing is just the act of bringing everything back in line. It's worth understanding why that drift happens in the first place. It's really down to price movement across your holdings. Every stock in the pie moves at a different pace. Some will run ahead, some will lag, and over time those individual movements pull the weightings away from their targets. The longer you hold without any intervention, the more pronounced that drift can become. And if the market does something dramatic, a sharp rally in one sector or a significant dip in another, that can accelerate things quite quickly. So drift is completely normal. It's not a sign that anything is wrong with the pie, it's just the nature of holding a diverse set of assets across different companies and sectors. The question is just how much drift you're comfortable with before you do something about it. And now here's the thing, for most of us, especially in the earlier stages of investing in this pie, you probably don't need to rebalance manually at all. And the reason for that is self-balancing through deposits. Every time you top up your pie on Trading 212 via the self-balancing option, it should be smart enough to direct your new money towards the slices that are currently underweight. So your deposits are doing the rebalancing work for you automatically without you having to sell anything. It's a great feature of the pie format that keeps things tidy without you having to lift a finger. And on the topic of Trading 212, I asked Trading 212 if they could give me a unique code that you guys can simply type into the promo code section. When investing, your capital is at risk. Sponsor code, terms apply. So if you've opened a new account recently or planning to open an account soon, then here it is, DivXP or DIVEXP, short for the dividend experiment. You have 10 days from opening your account to type this in and receive free fractional shares worth up to £100. I also get something as this is my custom code, so this helps you support the channel too. This self-balancing option is useful, however that assumes you're depositing regularly. If you're more of a lump sum investor putting in large amounts less frequently, then self-balancing through deposits is obviously less effective simply because there are fewer opportunities for it to work. In that case, keeping a slightly closer eye on your pie score makes sense, and you might find yourself doing a manual rebalance a little more often than someone who's dripping money in every month. Manual rebalancing. So when does manual rebalancing start to make sense? As your portfolio grows, your regular deposits become smaller relative to the overall size of the pie. So if you're putting in £100 a month but your pie is worth £50,000, that deposit just isn't moving the needle enough to meaningfully correct any drift. That's the point where you might want to step in and rebalance manually. The signal I use is the Trading 212 pie score. If that score drops to around 6.5 or below, that's generally my cue that the drift has become significant enough to address. It's not a hard rule, but it's a useful practical benchmark, and it means you're not obsessing over the pie every week unnecessarily. In terms of frequency, roughly once a year is a reasonable target for most people. Some years you might not need to do it at all if your deposits have kept things well balanced. Other years, maybe the market's done something dramatic and you'll want to tidy things up. But there's no need to be doing this quarterly or monthly, or even more like I've seen some new investors feel tempted to do. That's just adding complexity and stress for no real benefit. Every rebalance involves trades, and those small costs chip away at your returns over time. Keeping it to roughly once a year, or when the score genuinely calls for it, keeps those costs minimal. Now there's something really important I want to flag here because I think a lot of people don't realise this, but manual rebalancing on Trading 212 often involves selling. When you hit that rebalance button, Trading 212 will sell the slices that have grown overweight and use that money to buy the underweight ones, which sounds great, and it is, but if you're holding this pie outside of an ISA, those sales could be taxable events. If those positions have grown up in value, you might be crystallising a capital gain. So it's always worth being mindful of that, especially as your portfolio gets larger. And if you're inside an ISA, you don't need to worry about it. But if you're not, just factor that in before you hit the button. Will rebalancing mess with the dividends? Another thing people often wonder about, will rebalancing mess with my dividends? The short answer is not really, and not in any meaningful long-term way. You might shift a little weight away from higher yielding stock temporarily, but the Almost Daily Dividends pie is designed so that the overall dividend income is spread across a broad range of holdings. Trimming one slightly to bring another back up to weight isn't going to noticeably dent your monthly income. The dividend flow stays pretty consistent through a rebalance. So your income is safe, but what about the timing of a rebalance? Is there ever a better moment to do it? So is there a good time to rebalance? One more question that naturally comes up here, is there a good time to rebalance? Should you wait for a dip or avoid rebalancing during one? Honestly, trying to time a rebalance is a bit of a rabbit hole and probably not worth the mental energy. That said, rebalancing during a broader market dip can actually work in your favour. You're essentially buying more of the slices that have fallen in price, which aligns well with the long-term mindset of holding this pie. But if the pie score is telling you it's time to rebalance, don't overthink it. The whole point of having that benchmark is so that you're not making emotional decisions about when to act. Why do I sometimes see pie cash after a rebalance? One last thing on rebalancing, you might notice a small amount of pie cash sitting there afterwards. Don't panic, that's completely normal. With 50 holdings in the pie, the maths of trying to divide money into fractional shares across all of them will sometimes leave a tiny remainder that can't be neatly deployed anywhere. It's essentially a rounding artifact, and Trading212 have acknowledged it themselves. The good news is it's not just sitting there doing nothing. Your next deposit will automatically combine with that pie cash and invest the full amount, so it gets swept up naturally without you having to do anything. And in the meantime, Trading212 does pay interest on the uninvested cash, though worth checking you've actually got that feature enabled in the app, as it doesn't turn itself on automatically. Once it is, that interest is paid daily, so even that small amount is working for you while it waits. And if it's really bothering you and you don't want to wait for the next deposit, you can always just manually invest it yourself directly from the Holdings tab. But honestly, for most people it's a tiny amount and it will sort itself out on its own. So to bring it all together, rebalancing is something to be aware of, but it's not something to stress about. Let your deposits do the heavy lifting early on, and if you're a lump sum investor, check in a little more regularly. Watch that Trading212 score, and when it drops to around 6.5, in my opinion, that's your nudge. Aim for roughly once a year if you need to do it manually. And just be conscious of the tax side if you're not in an ISA. Keep it simple, stay consistent, and let the pie do its thing. Hey, thanks for watching this recent episode in the Almost Daily Dividends tracking series all the way through. Just a couple of things before you go. First is, as this is a freshly set up channel, if you want to stay up to date with the new episodes, the best thing to do is to subscribe and turn on the notifications. If you're a pie copier and want to get all the details of when I make changes to the pie and the reasons for the changes, then the best place to do that is sign up to the mailing list. I'll also give you a PDF guide to my 10 dividend investing commandments, or the rules that I use to help choose dividend paying companies to buy. Finally, if you want to find out more details about the pie, then check out the links in the description for more info. See you in the next one.